Good morning. Today we are going to start chapter 4 of our book. The name of the topic is chapter is Basis of Accounting. Now, one of the most important function of accounting is to determine the profit or loss incurred during the year. Okay. Now that can be determined using two methods. One is cash basis of accounting and second one is accrual basis or mercantile basis of accounting. Now from the name itself, cash basis of accounting, cash transactions are only recorded. Credit transactions are not recorded, or adjustments relating to outstanding expense, prepaid expense is not done. But in accrual or mercantile basis, we record the transaction as and when it takes place and not when the settlement takes place. Okay, we have already discussed that in accrual principle. Okay, now here we will discuss only cash basis of accounting. Under the cash basis of accounting, transactions are recorded when cash is received or cash payment is done. Okay, like for example, you sold a goods on 1st January and the customer makes the payment on 10th of January. So in your books you will record the transaction on 10th January and not on 1st January when the goods were sold. Okay, here we will take one example, like the office rent for the month of December 2019 was paid in January 2020. Okay, so it will be recorded in the books in January 2020, not in December 2019. Okay, similarly we can take one more example, like goods were sold on credit in the month of January and the amount was received in the month of April. So we will record it in the month of April and not in the month of January when the transaction took place. Now in the principles of accounting we have studied matching principle, where all the expenses were matched with the revenue. A cost was matched with the revenue to determine the profit or loss. But in cash basis, we are recording the transaction when the cash is received or cash is paid, and because of that the matching principle will not be followed. Okay, this system is incompatible with the matching principle, which states that the revenue of the period is matched with the cost of the same period. Now when the cash settlement is taking place, it is not necessary that it is received in the same year in which it has been incurred. So cash basis is not compatible with the matching principle. Now this method is simple, but in most of the businesses where lots of transactions are taking place or big organizations are there, okay, it is very difficult to calculate the correct profit. Okay, because lot of sales take place on credit, in the same manner purchases also take place in credit. Okay, so it is difficult for the organization to find out the correct profit and loss on the cash basis of accounting. This method is simple, but it is not appropriate for most of the organizations. Okay,